What's up, guys, and welcome back to another trading recap with me, Oscar. Today we're going to recap a short that I did on AMRH. I'm super lagging on pronouncing these tickers. Also, just before we get into this, I highly recommend you up that speed level to 1.5 or 1.25 because I tend to talk slow in these recaps. And one thing that I hate is to listen to people that talk slow. So if you're one of those people, just like me, up that speed level for your own sake. So MH, M, whatever, AMRH was a perfect short, a perfect short into resistance, and yeah, I ended up with nice almost 18% profit. And let me pull up real quick. And I'm somewhat not in a cause I'm like in a consistent streak of trading right now, and soon I'll be 17.79 percent perfect. And also, if you didn't see that, I'm currently up 318 bucks, and my profitly is going to reflect that I'm up like, I don't know what I'm going to be up 400 something now after this profit, and that is accurate, but that's before that's before the borrow fees. So like technically without bar fees I would be up like 440 bucks. But you have to make these mistakes, and I have been borrowing stuff before I started trading really. And you learn to develop stuff like, hey, I don't have to borrow until the opportunity is really there. So you learn also from that. So a quick tip if you're just starting out with trading, and especially if you're on the short side, like you're eventually going to learn it, but if you watch this and you can cut the learning curve and save a couple of bucks, like don't borrow stuff or don't borrow stocks that you don't like almost to 90% know that you're going to trade. Like in the beginning, I was borrowing shares of stocks that I thought was going to spike, rather than waiting it, rather than waiting for it to spike. So yeah, that's a quick lesson right there. But if you get into the trade, basically this is gap up into resistance, and we have this candle of resistance of 28 million, which is considered to be like somewhere medium. So but what makes me confident with this trade, and what made me real confident about this trade, is the fact that we double topped in pre-market. And I know that's like not super, you don't want to most of the time you don't want to trade pre-market because the volume is truly light and it's unpredictable, especially if the stock is like low float, low cap. But what I have tended to see like the last 2 to 3 times, because I haven't watched too many, so don't like rely on this setup, is that when we clearly spike or when we clearly top out, get that double top in pre-market, we are good to go. Like it shouldn't be a problem. So this is basically this day. So we have, and as you can see, 79 is the top, but 70 is the like consistent top. And even do it in 2 minutes, it will be showing you much clearer. So we have all these wicks at 270, and I figured 270 is I figured that I'm going to let this stock develop and show me if 270 is the top, and then if it looks that, okay, hey, this is the top, I'm going to short it. But basically, I wasn't like 100% confident within this setup, and as I said, I haven't been tracking it too much. Just been watching it a couple of times, but this is like it's somewhat of a combined strategy. It's both a gap up. We were gapping up like above 100%. So long-term investors, long-term bag holders want to cut their trade. The second key like indicator is that we have this this range right here of where the people that traded this last time who bought has been underwater until this day. So they become bag holders, and of course they wanna get out if they can for a break even. So I figured, hey, we have some key indicators, some key bearish indicators that this should basically go down further. So what I did was that I took, as the stock showed me that we got this first like pullback, I said, hey, I don't think it's a coincidence that we topped out at 270, and if that's the case, then I'm going to take a small loss. So I actually entered in the 253. I was a bit impatient. I should have waited for this like higher bounce, and here's like the confirmation. Of course, I will verify my trade later on tomorrow because you cannot do it the same day. So if you're thinking I'm sketchy, you guys check out my profit later on. So I entered at the 253 level, just basically being patient, grinding it out, and then we started to test these two area briefly. So 208, somewhere around that, and I said, hey, why not take some profits, because this has a history, as you can see, of spiking into market open, and of course you don't want to be part of that. But in hindsight, I could have been part of that without any troubles, but I ended up cutting half my position down here in the 208, and then later on, as we tested low once more and we bounced back, I said, hey, I'm going to cut it once more at 208. So I ended up cutting it at 208, which gave me that 17.79% of gain, which is perfect. Something that I'm going to work on and try to develop until next time is that, as with this trade, we had so many like indicators that lined up. It wasn't just we had like to combine two strategies, so we had spike into resistance or a bounce into resistance, and we had the gap up, so the massive gap up of more than 70%, which gives a better winning percentage because now we have two reasons for, or two strategies that based on two reasons why they should basically crap. So first up, what I should have done, or what I can develop and improve on until next time, is to be more patient, because I left not super much from my cover, but it's it's still profit. So 40 cents is quite a big chunk. It's like 20%. No, it's even, is it? Yeah, it's basically 20%, or 16, 17, around that, from my cover order that I could have earned by just being patient until midday. And if, of course, I'm going to get like stuff done with the tracking, then I can get more confident when to cover, so to say. But also the second factor that I should have recognized is, so I said earlier that I didn't want to hold into open as of the stock's behavior, But what I could have recognized was and take advantage of the stock's behavior, because then I could have shorted into this 2.5 area. And something else that I should have recognized is that 2.5 is a key round number, so that if that were, I wouldn't have been looking to short into that, but as in this case when it topped out at 205 or even just below 249, I could have said, hey, okay, nice, now we've been topping out, I got the confirmation, let me short into this small consolidation. And then I could have gotten my average at this 237, or like chased a bit and got that 235 or something like that. And then I would have been up for another good trade. So something that I really have to work on is that just because I have made a good trade doesn't mean that the trading stops. It's a very protective way to trade, and it's a very it's a very protective way to trade because I protect my profits for sure. But when my thesis is proven right once more with this topping action in the morning spike, and like all the variables is lining up, like okay, hey, we're topping at a round number, we're still within that major bag holder area. We haven't broken out. We haven't received any new news. There's nothing major bullish about this, and also we got that confirmation. Then I should, hey, let's re-enter this because it's just free money. It's easy money, or easy profits. So that's the major thing that I'm going to work on until next time, to really improve on re-entering. It's super good that I'm concerned with my trading and that I take safe profits, but I have to become better to re-enter when those opportunities lines up. But this is also something that I wrote on my Twitter. Twitter sound like a British. That you have to have this mindset. So I said like this: don't have a mindset that tells you "fuck, I missed a trade," because that's basically bringing you negativity. So I missed PED as well today. Um, as you can see, it's just a lot of arrows and stuff. So basically, I missed PED, which could have been a really good short, but it wasn't clear setup. But the key things, the major lesson that I want to say is you have to have a mindset that is positive for you to develop and stay in this game. Because if you have a mindset that said, fuck, I missed this trade, I'm such a loser, why didn't I take this entry at this 237 level or 235, or why didn't I see it coming, although we had this the previous chart with the morning spike that I talked about, why didn't I see it coming? You can't have that kind of mindset, because then you're dragging down your energy, you're getting all negativity, and you're like, yeah, I suck at this. But you're not. You have to have the mindset that rather encourage you to like sit down, watch the stock, and as I do right now, talk about it and to see, hey, what can I learn from my trading? What can I learn from my hesitation to pull the trigger? How can I make this trade be a good lesson for the next time as somewhat of this situation or opportunity comes around? How can I take advantage of the mistakes that I did or the hesitation that I had? And that's basically what I'm doing here. So the key lessons of this video or of this trading is basically one, that I've been talking about, or that I've been reminding myself lately, is to first off, I have to start believing my thesis, and this is a really good step of doing that, because I'm taking on a trade that I haven't, I have been seeing it, I have been tracking it some, but I haven't been like super 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 prepared, because I tend to prepare too much. um so this is a really good step for my trading development, to trust myself and trust my own thesis. The second thing that is key from this, that you should take off from this lesson or from this trade, is that it's okay if you cover too early, as long as you review and refine until next time, because that's what trading is about: refining, reviewing, and develop as a trader to become better and better. And just to say, just like to end off, I want to give props to myself as well, that I paid myself, because as I think about it, if I were to have done this trade differently, or let's say I know how this stock is going to play out, what I would have done that then, or let's say I have been thinking about this, what I would have done was, because this is the thing, I only reserved 400 shares, and this was a 200 share position. So what would have done was to be more confident with myself with the setup. Like, hey, it's not a coincidence that we're topping out at 270. We have um, previous resistance there, so I would have taken on my full size. That's the one thing that I would have done right away. But in concerns of my covers, I probably would have covered at the same time or at the same area, because the fact is, as I knew that this was potentially going to spike, if I was stuck in all of my 400 shares, I couldn't have um, I couldn't have gotten, like, let's say it spiked even higher, then I couldn't reshort any, because all of my 400 shares were of use still. But anyhow, that's just bonus to end it up positive. But let's say it like this: it's been a great day of trading, and it's been a great day for my development. I've learned a bunch of things, and I'm truly going to remember this trade and to refine and develop into the next trade, where as many indicators lines up as possible, because now I start to recognize what's ideal setups, what's like okay setups, and what's like once in a lifetime setups. I think that's it, guys. I hope you did had a great day of trading. um, if you didn't, flip the coin, see the opportunities in the mistakes that you did, and always, as always, be meticulous and always develop. Peace.